All right, well, continuing our conversation on the introduction to the financial services industry, I think we need to take a few minutes to talk about SWIFT and what SWIFT is, because it's a key part of the financial system globally. And I think it's an important piece that some people have misunderstandings about. So we're going to talk about SWIFT. I broke it into three pieces. So this is a three-part presentation. So again, just my regular disclaimer, this is just a high-level review, and I'm not going to make any advice. So this is the symbol. This is the international symbol for SWIFT. And, people get confused about what SWIFT is because they hear the term used in different contexts. They say, oh, I got a SWIFT message, or can I connect to the SWIFT network? Or I'm going to La Houppe, Brussels to meet at SWIFT, or I'm going to the SWIFT conference, and when they talk about SWIFT, SWIFT means a lot of different things. SWIFT is an international financial processing utility, right? SWIFT is an international standards and best practices organization. SWIFT is a member-owned organization. SWIFT is a software vendor. SWIFT is a physical network. SWIFT is a secure global messaging routing and delivery platform. SWIFT is a network protocol. SWIFT is a standard, a message standard. And SWIFT is an international banking conference called SIBOS. So when people say SWIFT, they could be talking about any one of these pieces, and they'd sort of be right. Because in some ways, SWIFT does all these functions. Some people use the SWIFT message standard, but they don't use the SWIFT network. They might build a message using the SWIFT standard and then deliver it in a file through their own channels. Or people might use the SWIFT network, in which case they have to use the SWIFT networking protocol. Or people might be using the SWIFT software, SWIFT called Alliance, to connect to their network. Or they might be using SWIFT as a standards provider. There's a lot of different things that they can be using, but we're going to take a couple of minutes to talk about SWIFT and describe these different pieces. So what is SWIFT, right? SWIFT is the Society for World Interbank Financial Telecommunications. Right? It is a member-owned cooperative that provides safe and secure financial transactions for its members. So it is a cooperative owned by its members, providing services to its members and its participants. It was established in 1973, so it hasn't been around that long. And it uses standardized proprietary communications platform to facilitate the transmission of information about financial transactions. We mostly talk about SWIFT. People talk about SWIFT for banking transactions, MT 101s or whatever. But it's not just banking transactions. There's a lot of brokerage transactions. There's statements, you can do orders, there's a lot of things that we do on the brokerage side where we use SWIFT messages for secure communications, right? But payment instructions, globally, you can communicate with exchanges. It's a very useful and powerful utility to the industry. Again, it's a messaging network for financial institutions. The big thing is it's highly secure. It's a closed network using tightly regulated standards, and it's highly secure. SWIFT neither holds funds or messages for client accounts. It just delivers the information. It acts as a conduit, as a utility to service in the organization. It began operating in 15 countries in 1973. It now operates in 210 countries, pretty much worldwide. It is the financial industry backbone for communicating with institutions. The number I put in here came from an old source when I first did this slide years ago. The presentation is a little bit old, but they do millions of messages a day. That's the point. The headquarters are in Le Hoop, Belgium, and that's where they're headquartered. Again, they're driven by their membership, so they're oriented towards the members. So it's a very global approach to things. It isn't U.S. centric. It's very, very international in its focus and its attitude towards things. So before SWIFT, what did we do before 1973? So before SWIFT came on the scene as a network, banks had to communicate using utilities like telex, right? Now, if you've ever used telex, you know that it's expensive. It's based on the old telex machines, teletype machines, which grew out of the was an evolution of basically Morse code telegram systems became telex systems. But telex systems are inefficient and expensive, and there isn't a standard. There wasn't a standard before SWIFT for how messages should be built. In order for computers to electronically process transactions, we need to have tight standards. We need to control what names are used, how messages are structured, how they're built, how they're populated, and how they're used. So none of that existed really before SWIFT. It was a problem. So SWIFT was formed. 7 major international banks came together. They saw this as a problem. It was a problem for the banks because the banks want to operate efficiently and they want to reduce their costs. They want to reduce their errors. So the 7 banks came together and they formed SWIFT as a cooperative to set standards and improve their processing. Now it's grown much beyond just banks. It isn't just banks that connect to SWIFT. I'll get into this later, but there's a lot of different participants in the global financial network that use SWIFT. And SWIFT is now really one of the dominant networks for financial communications. The big thing for SWIFT is it's highly secure. It's an incredibly secure message. As you probably are aware, when you deal on the internet, you deal on the cloud, you deal on the internet, there can be security pieces. But SWIFT, by the way it's set up as a network, when you're sending a SWIFT a message over the SWIFT network, it's highly secure. And that's why banks and financial institutions like it. So when SWIFT came out, it really was a sea change. Banks quickly adopted it. Now, there are other ways to send wires, send funds. Even back in the 1970s, there was FedWire, there was Ripple, there were chips, and those are all good. I'm not criticizing those in any way, but SWIFT came on the scene the 70s and 80s, and it became a dominant network for the global networks because it was standardized, it was global, and it could guarantee delivery in a highly secure message, no matter where you were dealing with in the world, whether you're sending a payment or an instruction to Singapore or Nigeria or anywhere in the world, you're going to send a message. While SWIFT started primarily for simple payment instructions, it now sends messages on a wide variety of message types, right? So it's no longer just message wires, which is where it started. It started as wires and payment instructions. Now there's all sorts of messages in SWIFT. Nearly 50% of SWIFT traffic is still payment-based, but 43% now concern security transactions and other other treasury-oriented transaction flows. So who uses SWIFT, right? Well, first of all, people using SWIFT have to be admitted to the SWIFT network. They have to become either participants who aren't owners or aren't members, or they have to be participants, right? So in the beginning, when it was originally set up, only members, only owners, only people who owned a piece of SWIFT, only people who were officially members could send messages in the network. Now they've opened that up over the years. So now they'll have a new classification where you're not an owner, but you're just a participant. So they've grown it. So who participates in SWIFT? This closed private network, banks, brokers, institutions, and trading houses, securities dealers, asset management companies, although not as many asset management companies, clearing houses, depositories, exchanges, corporate business houses, treasury market participants, and service providers, foreign exchange and money brokers. Those are all the people who participate in the SWIFT and will use SWIFT network. And some of them are participants and some of them are members. The difference between the participants and the members have to be banks pretty much. And members get to vote on topics governing SWIFT. So the members have a governing voting status. Participants, like exchanges, are typically participants. They participate in the network, but they don't get a vote. So basically, when SWIFT came along, here's this network, and what it did was it let us connect multiple parts of the existing industry infrastructure. It connected the banks, the broker dealers, insurance companies, and then it brought in connections for fund processing hubs, custodians, stock exchanges, order routing platforms, and it provided connections to third-party administrators, transfer agents, fund accountants, custodians, trustees, and then fund providers. So what SWIFT did was it provided a network to take all these people that participate in the process and bring them together and tie them together into a transaction flow. So how does SWIFT make money, right? So where does the money come from and go? So SWIFT is a cooperative society owned by its members. Members are categorized into classes based on the share of ownership. All members pay a one-time joining fee plus an annual support charges, right? So the members pay into it, but SWIFT charges for each message that's sent on their network. And it's funny because they charge the sender of the message, but they don't charge the receiver of the message. So whoever is sending the message pays, whoever receives the message doesn't pay. Okay. And there's different charges, there's different scales, and it's based on volume. There's a lot of things on what you pay per message. So what you pay per message could be different depending upon how many messages your institution sends a year. Right? In addition, SWIFT has launched other services that are revenue generating. You know, they've got services about business intelligence and reference data, compliance services, but they have those other tools. But what's interesting is I said SWIFT has members and it has participants. So the members pay for the messages they send on the scale, and the participants pay for the message they send. But at the end of the year, SWIFT, because it's a cooperative, they take all the money they collected and subtract out their costs, and then they come back with any profit they make goes back to the members. Members are vote on tiers and structures, and the money goes back. So the members, potentially, if you're a member institution, if you're a bank like Citibank or Chase, and they're certainly members of SWIFT, at the end of the year, they could potentially get money back from SWIFT, or the membership could vote to put that money into reinvestment for the future for SWIFT. But the point is, it's a cooperative. It's owned by its members. It makes money by charging per message sent on its network, and it also has other services, like it sells software. Alliance is a software package it sells. They have some consulting services they sell. They have other services that they sell. That's how SWIFT makes money for its members. So there's the SWIFT network I've talked about. SWIFT maintains a separate physical network. This is very important. SWIFT is its own physical network, their own hardware, their own network. They don't ride on top of open common networks. What's interesting too is they maintain a separate network for production and a separate network for testing and non-profit. So if you have a connection to their physical net, the physical connection to their production network, and you want to use the test network, that's a separate physical infrastructure. It's different, network hardware connecting to a separate physical network. So that's a very important distinction about SWIFT is it's a separate physical closed network. Only participants into their own physical network. The SWIFT secure messaging network runs in 2 redundant data centers, although this might not be true, it might be 3 now, but I'm not sure. One of them in the United States and one in the Netherlands. These centers share information, but they have presences around the globe. So although their message routing network has those 2 main data centers, SWIFT has presences, point of presence, network presence in countries all over the world. They opened a 3rd data center. I thought about this in Switzerland in 2009. SWIFT uses a very distributed architecture, partitions message into 2 messaging zones, US and European and transatlantic. Europe's own messages are stored in the Netherlands and in part of the Switzerland data center, operating center. Basically, there's a lot of detail. The point is, it's a very large, very secure, very redundant a global network. So again, it's a private network for participants only. This gives a diagram, basically shows some of the types of organizations that participate in this network, whether they're investment managers or stock exchange or transfer agents or broker dealers. But what this does is this provides a single physical network that all these parties can electronically process cross-border, global, or domestic transactions. Now, not only does it provide the network, it also provides a messaging standard and standards for how certain types of transactions should flow. What should be the business process for a particular message, a particular business transaction? Let's say it's a corporate action, right? What's the standard for how a particular type of corporate action event should flow, right? Now, some institutions don't like SWIFT as a network because they don't like to pay the cost per message. So they'll say, well, we want to use the SWIFT format. We want to use the SWIFT standards, but we don't want to send our messages over the SWIFT network. So that'll happen quite often. Quite often there'll be organizations that will choose to use the SWIFT standards. They'll use the SWIFT business practices, best practices for how to do a particular transaction. So they'll follow the transaction processing business flow standards, and they may even follow the message standard, but they won't send the message over the SWIFT network. They'll use some other channel. They'll either use their own network, They'll use a closed point-to-point network, or maybe they'll load the message into a file and do their own secure delivery of the file, and that's okay. But the point I'm making here is SWIFT is a lot of things. It's this cooperative organization that links financial organizations all over the world and sets standards, and it's also a physical network. That was the point of this section. So that was part one. I hope that wasn't too confusing. And if you have any questions on part one, please send me an email at the address listed below. Now we'll go on to part two.